Hello, folks. Tim Davis here, coming to you guys with a late edition of my weekend market review. It's been had a busy week, so it is now actually June 27th, 2022, and time is now about 1:05 a.m. Monday morning. And I'm going to start by taking a look at the daily chart of the S&P 500. So here's the daily chart of S&P 500, and I'll point out that even with the rally on last week, we are still in the bear market, folks. Here is this blue line, light blue line represents my 50-day moving average. The red line represents my 200-day moving average. And as you can see on this daily chart, we have the 50-day cross below the 200-day right around here. It was back in May, between April and May. So that lets us know that we are definitely in a downtrending bear market. It doesn't mean that stocks go down in a straight line. It's like they don't go up in a straight line. You have this channel that we pretty much been trading in on the way down. And recently we had got close to the bottom of the channel right here. Hence, we had starting to get a rally in price action in S&P. Now, if you look closely, you'll see the last time we had a sustainable rally, we moved just up to the 50-day moving average and right before the upper band of this channel, and then prices quickly reversed. So as we go through this bear market rally, there could be more room to the upside in reference to this. But I think we'll probably be muted right at that 50-day moving average. So bulls, enjoy it while it lasts. Bears, be ready to pounce if you're not already in a bearish position. We'll point out a couple areas to pay close attention to as we go into next week. 9 times out of 10, when there's gaps in the market, gaps fill. Here's a gap here. This one has filled. There's another gap here. So next week, we could see a continuation of this rally, maybe right to this gap fill, this next gap fill, which we should probably start, the price action should probably start to run into the 50-day moving average around about there. Then we have to wait and see what happens. We could experience a reversal once prices get close to that 50-day moving average, and we see this next gap possibly could fill. And if for some reason we surpass this gap, I don't think we're going to go much higher than that. But right now it's in a nice strong rally for the bulls temporarily. But just be mindful that we're starting to get to possibly heading towards overbought conditions in the future. Short term, probably this week. Running into resistance right at that 50-day moving average is going to be something that we really need to pay attention to if you are bullish in this market. That if we hit that 50-day, we could get immediate reversal, and that could be trouble for stocks for the next leg down. Last time we hit that 50-day moving average, price action pretty much stayed muted there for a minute. As you can see here, hit that 50-day moving average, price action stay right around the 50-day for a couple of days or so, and then came right back down and created a lower low. So I honestly expect the same type of action after this rally is done. After this rally is completed, I expect the same type of play. So we'll probably hit this 50-day moving average somewhere, maybe stall for a bit, and then head back lower to create another lower low. So again, maybe a few more days left in this rally, and then we have to see what happens. It could be running into resistance and then heading lower again. We look at a I'm going to stretch this out just a bit here. Take a look at a weekly chart. And as you'll see, price action is running right into that 200-day moving average on a weekly chart. So that's something to pay close attention to as we run into that 200-day moving average on a weekly chart. Get a little bounce here. If we break that, once we break that 200-day moving average on this weekly chart, folks, we could see another acceleration to the downside. So that's something to pay close attention to. Let's go straight to the Dow. I want to point out something here on the Dow because I think the other indices are going to do the same eventually. And I want to see if I can, let me put up a monthly chart, see if I can point this out. Okay. I want to point something out here in the monthly chart before I go any further. So I want to highlight this right here. This was the peak in 2020 before the COVID plunge. The way price action works, folks, normally we like to come back to retrace or come back and revisit previous levels of resistance in a downward moving market. So here is where price action got a bounce from on this last week, and that lines right up with where resistance was back in 2020 when price action ran into that level and dropped like a rock. So former resistance becomes support, which shows right here. We got that bounce. Now we have to see how long that bounce lasts. I don't think it's going to last that much longer. So I wanted to point that out, that we are right back at a level of support, which used to be former resistance right before the COVID plunge. Now let's go back to a daily chart. Now looking at the daily chart, we are definitely in this downward channel. You see here, well-defined downward channel. And we are running, about to run right back up to where to? 50-day moving average again, which will probably act as a level of resistance. So there's something to pay close attention to as we get back up to that 50-day moving average sometime this week. Also, that represents a possible gap fill, another gap fill, if we can get back up to that level. So there's a small gap right here. So the small gap right there. The small gap right there, which price action could make an attempt to fill. Here's one that was already filled. There's a gap that was filled. Here's another gap right up here above price action, which will take us right to that 50-day moving average. So let's see how that pans out with this next day or so. And be prepared for a possible reversal if we stall once we hit that 50-day moving average. That is a look at the Dow Jones. Now let's take a look at the Nasdaq. All right, Nasdaq, same type of picture, still in a downward channel. Almost at the bottom of that channel. We got a reversal back up. Where to? Heading right back to that 50-day moving average. And the last time we hit that, got close to that 50-day moving average, this is what we experienced. Price action stalled. And then eventually, price action pulled back. So could we see the same thing? Up to the moving average and then another pullback. I think that is the more than likely scenario. And just like the Dow Jones, look at the COVID pullback. Here is formal resistance, which will become support, almost at the support level now. So we could again see a slight bounce here, and then I honestly think we're going to end up dropping below this level of resistance, or this level of support, which was formal resistance right before the COVID plunge. I think we're going to drop below the level and may start to head down to test the COVID lows, the COVID 2020 lows. So that's something to pay close attention to as we go through the rest of this summer. Here's a weekly chart. You can see price actions right back at that 200-day moving average, trying to hold on to that level. I don't think it's not going to be too effective holding on to that level. May see a little bit more movement, but I think we're going to end up dropping lower and creating another lower low. All right, so let's look at the Dow, look at the Nasdaq. Let's take a look at the S&P. I think we already looked at the S&P, but if we did, we'll look at it again. But here is a weekly chart at S&P right at the 200-day moving average. So I do expect a little bounce here, almost right at the heading back towards the upper trend line of this channel. Look at our daily chart again, almost right at that 50-day moving average. I think I already did this, folks, but sometimes I like to reiterate things just so you can get the picture. Here's a Russell. Same case scenario. Russell almost back up to that 200-day moving average. I'm sorry, 50-day moving average with a couple gaps in here as well. So there's a gap here. And there's one here. Like this one is about to be filled, if not already filled. So we have a gap of price action here. And there's another gap here. So these could fill this week, possibly. And if it does, I'm looking for immediate reversal. I don't think I can't see the Russell going too much higher than this. The Russell is just one of the weakest links of the bunch. So could see a little bit more movement higher, maybe back up to this 50-day, and then possibly a reversal back to the downside after those gaps are filled, if they get filled. All right, that's our major indexes. Well, let's take a look at one more chart of this Russell. So again, as you can see, I have highlighted here the resistance level. That used to be resistance prior to the COVID plunge. Hit the level and we got to pull back, bounce back above the level, form a resistance, become support. We're right back at support over here. And as you can see, price action is trying to get a bounce there. If that support level is not held, we're going to really take a nosedive, folks, and start to tread back down, possibly test the COVID lows, folks. Yes, I do still believe that we are in store for a possible retest of those COVID lows. All right, now let's take a look at the VIX. And let's go start off with a daily chart of the VIX. So since the markets are back in reverse, heading back to the upside, of course the VIX is continuing this pullback. So we actually fell through one level of support. Now we're back into a level that we saw some possible gap fill on a 4-hour chart. Here's a 4-hour chart on the VIX. So that shaded area is a level of resistance, area of support rather. Like price action is attempting to get a bounce there. Let me take a look at VIX futures for a second here. So yeah, so you got price action looking at VIX futures is trying to find some support here. So VIX futures is trying to find some support here right around that 200-day moving average. So we could start to see this travel back up versus going much lower. So that's something to pay close attention to as we begin the week. Hovering just below that 200-day moving average on VIX futures. So it's trying to find its footing. So that in turn could spill over to the cash market once the market opens tomorrow. Again, here is 4-hour chart. Look at the VIX cash market, and you can see right there as we traded right down below that 50-day moving average. I'm sorry, the 200-day moving average, right into an area of our area of support. Look at that candlestick that formed on Friday. That's a sign of a possible reversal. So we could start to see the VIX move up early this week, folks. So that's something to pay close attention to. All right, now let's take a look at a couple of these commodities, because some of these commodities have been pretty interesting. Oh, let's see that over there. Okay. Okay, so here is crude oil. One thing I like to point out on crude oil is that, and this is interesting, that in crude oil, we see on the 4-hour chart, we see the 50-day cross back below the 200-day. That's not a great sign for crude. However, this week is going to be a test to see if crude price is going to retake that 50-day and the 200-day. Price action is muted right below the 50-day moving average on a 4-hour chart now. But we got a huge sustainable, like we have a possible sustainable bounce off a level of support. So that dash line you see me have drawn there, it was a dash line I drew a while ago at a level of support. We got a bounce here back in May at that level, and we went higher. Now it's like we're attempting another bounce at that level again. So now the question is, how much higher do we go? Do we break back above the 50-day and the 200-day on this daily? I mean, on this 4-hour chart? Or do we run into resistance right here and continue to trickle lower? That's something to pay close attention to in this week. All right, looking at the daily chart of crude, we are in oversold territory, so we could possibly get this sustainable bounce. So we can see this well-defined bounce off of this level of support here. So we're stuck between that support level and the 50-day moving average on the daily. So price action could find some way to rally back above the 50-day on the daily chart and head back up towards this area here, which will act as a level of support of resistance. Right back up to the top where we started to pull back. So right around 122, we could be making an attempt to head back up towards that level. So that's something to pay close attention to. If we can break back above the 50-day moving average on the daily, then crude could have room to rally back up to the area where it fell from. So that's something to pay close attention to. Take a look at nat gas. And nat gas is interesting because it is right back. I mean, it had a huge sell-off over the past week. So looking at this daily chart, it's right back to a level of support, right back to its 200-day moving average. So we could possibly be in store for a possible rally in nat gas. If nat gas finds a way to get a bounce off of this 200-day moving average, we could see a nice little rally in nat gas. We are definitely in oversold territories, looking at the full stochastics and the wins percentage, and RSI touching oversold territory. So we could be in store for a possible bounce in nat gas in the near future. So again, watch nat gas for this week. If we can hold this level of support, not break too far below this 200-day moving average, we could be in store for a possible reversal to the upside. Okay. Gold and silver looks a little tricky right here. Now gold, looking at a daily chart, it's just hovering. It's just struggling to maintain, or should I say maintain a position to recover back above the 200-day and the 50-day. It's been hovering right around the 200-day and the 50-day. price action has, and it's been doing it for a minute. So gold wants to it wants to try to retake the 50-day and 200-day. Right now, it is struggling to do so. So that's something to pay close attention to. Price action has been muted between its 1815 to 1860 level for quite a bit. So that's something to pay close attention to as we continue to travel, head throughout the rest of this year. I'm looking at the weekly chart. Looks like we could be in store for a possible bounce because right now, gold is right at a level of showing oversold conditions in the full stochastic and wins percentage. So we could be in store for a possible bounce or some type of rally in the near term. Silver, same type scenario, right back at the 200-day moving average. Trying to hold that level of support, so we could be in store for a bounce here as well. So that's something to pay close attention to. We could be in store for a bounce, or it could just stay stagnant and just stay at this range, stay at this 50-day move, 200-day moving average for a while, and then break lower. We have to see how things pan out. So it could be at a level where gold and silver don't move much. It could stay around that 200-day moving average too. So that's something to pay close attention to over the next week. All right, folks. Hopefully, this is something that can help you navigate you guys through this next trading week. And without further ado, I will catch you guys on the next video and enjoy the opening beginning of the week. And I will try to catch up with you guys later in the week. Have a great morning.